pathway to home ownership is my presentation for you guys. Here's my contact information. The objective of this presentation is to equip home buyers with a comprehensive knowledge and the tools they need to navigate the home buying process effectively. This seminar will empower you all with the confidence and give you the understanding that's needed to make informed decisions and have a successful purchase on your ideal home. Why does it matter? Homeownership matters because it builds equity. Each mortgage payment contributes to your home equity. Property appreciates in value. So I like to refer to it as having like a forced savings. If you own a home, it's literally like putting money in the bank every month in your savings account, right? And over years, your savings account is just growing and growing and growing and growing and growing. And at any time, you can have access to your savings account as long as your credit is stable and you have the means to meet the criteria to pull the equity out of your home, however much you decide to do at that time, and for whatever you need that money for. And then on top of that, your home can eventually be paid off and owned free and clear, and you can pass that particular item down to your children and create that generational wealth aspect, of what it means to own property. So it's a long-term investment. It provides stability and security for your family. You don't have to worry about a landlord selling or going up on rent or doing all of these other things that come along with becoming a renter. It gives you a sensibility of pride. It definitely takes you to another level when you understand the value in being a homeowner. It just enlightens you. It takes you to another level. You have this new experience that gives you a personal growth. Okay, when becoming a homeowner. It provides a tax benefit, so you're able to write some things off during home ownership and bring down your taxable income. Meaning, if you bring down your taxable income, that's the less you're taxed on. Meaning, the more pocket that goes in your money goes in your pocket during tax season. Okay, the more money that goes into your pocket. It can provide potential rental income. So there's a lot of creative things that are going on in this day and age with property, that people are using their property for to make more money and to earn passive income without having to work for it. Some people may purchase their first home, and then when they're ready to grow and expand, or they need a bigger house for some reason, they will rent their home out. Um, and bring in rental income, right? And that rental income helps them pay for their new purchase on their bigger home. Some people who have bigger homes, maybe their kids have moved out of their house, they are able to rent their rooms out because people look for just people who just want to rent a room. Maybe they're in passive, maybe they're a college student, maybe they're a traveling nurse, things of that nature. And so people are able to rent their rooms out in their homes or a section of their house for potential income. And then last on here, and most definitely probably one of the most important things, is that home ownership builds generational wealth. Okay. So, what is the process? What does it look like when going into a home ownership? Financial preparation is a huge part of home ownership. You want to make sure that this is something that is in the forefront of your mind when you're getting ready to prepare from home. I have people that call me all the time that want to purchase a home, but they've never thought about their financial situation, or preparation or anything like that. They don't have any credit history, but they just know they want to purchase a home. And so when that happens, I have to take them through a process to get them prepared. So you want to prepare because you're going to have a down payment and closing costs when purchasing a home. Your down payment can run anywhere on a single family home from 3.5% to 5% of that purchase price. What does that look like? That means if you have $100,000 home, 3.5% down payment on that home is $3,500. If you have a 5% down payment, then 5% on $100,000 home is $5,000. So whatever the price of your home goal is, the purchase price, you want to multiply it by 3.5% to get an understanding of what your down payment is going to look like. When it comes to closing costs, your closing cost is going to run probably 2.5% to 3% of what the purchase price of your home is. That down payment is go I mean, that, the closing costs consist of lender fees, realtor fees, title company fees, and things of that nature, and we'll get off into that. Okay. But I want you guys to start hearing this terminology so that when you go through this process, you will have heard this before and know where these costs are coming from. Okay. Now, we'll get off into down payment assistance, because with your down payment and with your closing costs, there are several things that can take place that can offset that cost. So even though you may be looking at a $7 or $8,000 closing cost and down payment on $100,000 home, there are down payment assistance programs that can offset that cost for you. And then there's also a seller paid closing cost that your agent can negotiate on your behalf to offset that cost for you. So keep that in mind. Don't get intimidated by having to have a large amount of money out of pocket when purchasing a home. Okay. Your credit has to be good, and we have Mr. Donnell on the line that is going to introduce himself and talk to you guys about credit and how what that means for homeownership. And then also budgeting is a very important part of homeownership because we do want you to be able to afford a home when you purchase it. You want to make sure that you can understand what you can afford. Um, we want to make sure that you're not what we call house poor when you go into home ownership. So you're going to take into consideration things such as your homeowner's insurance, property tax, your maintenance, the utilities on your home, your groceries, clothing, any kids' activity, daycare, vehicle expense, maintenances, things of that nature. And um, and so I'm going to provide you guys with a worksheet, um, at the end of this seminar. You'll get it through your email, and that'll give you an idea to walk through and see what your budget is for purchasing a home. Okay. Why is credit important? It's because you need credit in order to purchase a home. You have to go to someone, you have to ask them for money to make this large purchase, and they are going to want to know that they can rely on you to pay that money back. Okay. So it's going to give you preference with the lender. It's going to allow you some negotiating power with the lender, especially if you have a really great credit score. It's going to save you money. It's going to give you the access to that money that you need. It's going to provide a lower interest rate, and it's going to ultimately get you that loan approval, aka pre-approval letter, that you need in order to move forward and get the home that you desire. And Donnell will get into this more at the end of my presentation. Okay, here are some credit repair tips. If you guys want to screenshot this, feel free to do so. Um, I'm going to just go over a few so that you can understand some of the things that you can start implementing or doing in order to have your credit scores either start moving or to start building your credit. So, one of the things I recommend is that you request your credit reports once a year. You can do that through www.annualcreditreport.com. This credit report will, this particular site will provide you with Experience, Equifax, and TransUnion's credit reports. You want to do that every single year. It's free. And the reason why you want to do that is simply because sometimes there are things on your credit that may not belong to you. Okay. And you want to make sure that if something has popped up on your credit, that's negative, that's not yours, that you catch it early on and you dispute it to get it removed. So you want to make sure you're reviewing all the errors, catching those quickly on. You want to go into a dispute with that. Okay, and Danielle will talk about more ways that you can dispute credit. If there are any late payments that you have acquired from not paying your bills on time, those will show up on your credit report and they really damage your credit score. So you want to make sure you're paying everything on time. You want to reduce your credit card balances to below 30% of your credit limit. So if you have $1,000 credit card limit on your card, you want to keep that credit card balance under $300. Okay. So whenever there's low, when you have a low credit line like that, I always tell people, charge some gas, to keep that credit going. Go to the grocery store, use that card for something of that nature, and just make sure you don't ever charge over $300 if it's $1,000 limit. And then make sure you definitely pay your monthly payments on time. Avoid any new hard inquiries, meaning just don't go out if you got great credit and just start applying for credit everywhere. Um, Keep old accounts open. It used to be a time, and Donnell can attest to this when he come on, that you used to could close old accounts that you no longer wanted to use that card for, and it would bring your credit score up. Now, when you close an account, it actually drives your credit score down. So you want to keep those open, okay? And set up payment reminders, stick to budgets, do whatever it is that you can to help you keep that credit together. One of the other things, a tip that I want to throw out here that's not on here, but it's in the guide that I'm going to give you guys. I'm going to give you a guide at the end of this seminar for participating. Is one of the things that I see a lot is people have doctor bills on their credit report that is hurting their credit score from moving up. And really, honestly, if you inquire doctor bill, emergency room bills, things of that nature, you can always call and work out a payment plan with them, a low payment plan per month that you could possibly, keep up with. And then you can also, if you're financially challenged, you can apply for financial aid. Okay. And you can call and say, hey, I got this bill. I can't afford to pay it. I would like a financial aid application. They will provide you that application. You fill it out, you send it in. And in most cases, I've seen that they completely eliminate the debt altogether or they lower it so much that it makes it very affordable for you to make payments on. Okay. All right. So I'm going to go through this presentation now of the actual process and what that looks like. So preparing to shop for a home, we're going to look at, we've already discussed finances for the most part, but we're going to go into the loan options on that part. Finding the right broker. I'm going to talk to you guys about how to choose your agent that you're going to look for. Finding the right property. It consists of making the offer, going through a negotiation process before there's an actual acceptance on your home. Then we'll talk about the closing process and moving in. Okay. And then Danielle will come in and talk about the credit aspect of it and how to get those scores up. Okay, so your home buying team. So whenever you purchase a home, you're not alone, okay? You're going to have a team of people that should be working on your behalf to make sure that you have a successful experience with the process. And it's going to start with your real estate agent, whoever you choose, which is a licensed professional. We also go by the names of realtors if we are members with the St. Louis Association of Real Estate or the National Association of Realtors, I should say. And then also a lot of minorities in the city of St. Louis and across the country because it is a nationwide organization. It's called NAREB, the National Association of Real Estate Brokers. We are members of those as well, so we call ourselves Realtists. Okay, and it's a story behind that. But the Black Association call themselves Realtists versus Realtors. Your team is going to also consist of a home inspector. Um, he comes into play when you go under contract. He's going to inspect your home from the roof to the foundation. Okay. You're going to have your lender. That's who you're going to choose to do the loan for you, to actually loan whatever bank you choose to loan you the money. You're going to have an insurance agent. You're going to have an appraiser that's on your team. and then you're going to have an escrow agent. Okay, and we'll talk about those individuals a little bit more as I just go over what they actually do for you in this home buying process. So let's talk about hiring an agent. So a lot of times people don't realize that they actually they hire their own agent. Um, you can have an agent approach you, but ultimately it's up to you to do business with that. You go into what we call a buyer's agency agreement with that agent, meaning you're going to only work with that agent to find your dream home and to get you through this process of purchasing it. An agent should be very well connected to the industry, and have a network of professionals that they deal with, that that they trust, that they can refer you to. Okay, so they're going to help guide you, manage the transactions, educate you through the process, support you, and then give you access to their network of professionals that are going to take care of you during this process. I think I mentioned at the beginning that I had an agent that really, I, of course, I didn't know what I know now, and I kind of went with someone that someone referred me to, and and I can just say that it wasn't a great experience. Um, so here are some things that you can do looking to hire an agent. You can interview them. You can just ask them questions that are genuinely a concern to you, that you know will make a difference during your process. If you guys want to screenshot this, feel free to do that. You can ask them how long they've been practicing, if that's important to you. You can ask them if they're part-time or full-time, if that's important to you. If they're a part-time agent, their schedule may not be as flexible as a full-time agent. And maybe you have a very busy schedule and you need someone with a lot more flexibility. You can ask them, do they specialize in a particular area, to show you a house. So if let's say even with St. Louis is such a broad area, you got the south, north, east, you got St. Charles, all of that going on. Maybe there's a specific area that you want to live in. Ask the agent if they cover that area. Okay. Do you have any references or reviews? Agents should, may or may not, but they should be able to steer you somewhere to read reviews on them. You can go out on Realtor.com and get reviews, and probably even Zillow for myself, and also my website. Are there any commission or fees due from me? So this is something I'm going to spend just a couple minutes on, because um, seems to be a really confusing part when working with buyers. When you are getting ready to purchase a home, a lot of times buyers thought, okay, I have to pay the agent, or they had in their mind that if they could get close to the seller on a particular home that they wanted, that they had a better opportunity of obtaining that home, and that's not necessarily the case. There used to be a time that there were very little fees due from buyers to their agents that assist them when they got ready to purchase. That has recently changed uh, last few months, be due to a lawsuit that took place with the National Association of Realtors. And what it did was basically put more of the financial burden on the buyer to pay their agent's fees, because at first the agent could get the seller's agent to pay those fees for the buyers. Okay. Now, there's still ways around that, and agents are still able to get their buyers to the closing table with very little money out of pocket. Okay. But in some cases, you are going to incur some type of fees that you're going to have to pay your agent. Okay. So keep that in mind. It becomes part of your closing costs. It's not due up front. So the agent basically has to work for you, find your home, get you under contract, and get you all the way to the closing table. Okay. And then that's when your fees are due. That becomes a part of your closing costs. And you can discuss those fees with the agent when you decide to hire someone. And then why should I hire you? I think it's a great question if you haven't figured it out by the time you've talked to an agent. Okay, lenders and pre-approvals. I already kind of touched on this. But I do want to say choosing the right lender is important. I have people that will call me who have already chosen a lender, and sometimes it's somebody that's not even local. It's like um, Rocket Mortgage, which I hear is a great lender. So I'm not saying anything against Rocket Mortgage, but there's other lenders that are out here that we've never even heard of that people may come to us and have a pre-approval. I'm gonna tell you why that can be a hindrance to your process or cause some problems. So I've been an agent for so many years, realized that having a local lender is the best way to go, simply because you have access to them. Um, there's probably people who have used them before that are familiar with them, especially your agent, to know how they operate during this process and how they take care of their clients. All lenders are not the same, their processes are not the same. You have banks that will loan you money, and then you have mortgage companies that will loan you money. Their policies are different. And I've had some not so good experiences with some banks and companies through the process. And so whenever I have that with, let's say, these particular lenders, when I have clients, I kind of like only like to, I would say, encourage them to go in directions that I know a lender is going to be a little bit more stable for them and make the process easier. Okay. So it's very important. You can talk to your agent when it comes down to dealing with the lender and getting your pre-approval, because they may have some relationships that they can refer you to. Okay, so I'm going to go over the lender's piece and what they look for in order to give you a pre-approval. Lenders are going to be looking for job stability. So they want you to have at least 2 years of work history in order to be as a part of the qualification for an approval. So 2 years look like, okay, I'm just going to say McDonald's for 12 months. And then I moved over to Burger King, and I've been in Burger King for 2 years, or something like that. 2 years of working history is not, I've been at McDonald's for 6 months. I lost my job and I haven't worked for 8 months. And I just started working for Burger King and I've been there for 3 months. And now I'm over into 2 years. No, that's not what they're looking for. They're looking for a stable work history as part of their recommendations for an approval. Most lenders look, and I'm gonna not gonna say most, because you can get an approval with a 580 credit score, but that's not good, and most agents do not encourage that. I always encourage my clients to have over a 600 credit score plus. Okay, and Donnell will talk to you more about why that's important when getting your approval, because it could hurt your interest rate, and you can end up paying more on your home and having a higher mortgage payment with a lower credit score versus if you had a higher credit score. Okay, they're going to look at assets. Do you have a savings account? Do you have do you have rental property? Do you have anything else as value? They'll look at that and consider that as well, because they like to see that you're prepared. But that's not always what determines your approval. And then house qualifications. So even when we find a house, it has to meet the guidelines of that lender. Um, Policies for whatever loan that you have to get this house. Okay. And we'll talk more about that when we get to one of the next slides. And then personal qualifications, your debt to income ratio. Okay, what is debt to income ratio? Debt to income ratio is, let's say for instance, you make $4,000 a month. That's your salary on your job. If you have $3,500 being paid out to bills, you're paying your kids' car note, your car note, you got all these high credit card payments that you're paying every month, and now out of the $4,000 that you make, $3,500 is going towards um, these other bills. Well, that's going to disqualify you from getting a loan, because the lender wants you to have some type of um, income. They want you to have some type of space that makes you that is comfortable for you to be able to pay all of your bills plus your mortgage payment. So the guidelines for, let's say, a Fannie Mae FHA loan, people like to call that loan a first time home buyer's loan. I believe their guidelines for debt to income ratio is 49%. So that means that if your income is $4,000 a month, then they don't want your total debt to be over $1,900 a month. Does that make sense? And that's including your house payment. So let's say, for instance, if you're looking for an $800 house payment, that's what you have determined you can afford. All of your car notes, credit card bills, and that $800 house payment that you've determined you can afford cannot exceed $1,900 a month if your income is $4,000 a month. So that's just how that works. Next slide, mortgage options. Okay, this is the different loan that are out there to provide people with the loans that they need for homeownership. You have a conventional loan, which is not backed by any government entity, and it's the most common type of loan. And you generally can put down the requirements is for you to put down 3 to 5% on a down payment, and that depends on where your credit score is. Okay. With this particular loan, you typically have to have a higher credit score over 640 in order to get approved for it, and no past credit issues. So your credit has to be pretty good in order to get this conventional loan. Also, with this type of loan, it will allow you to purchase a house that need improvements. Okay, like some major improvements. Like you can purchase a house that may need a roof. Maybe you find a beautiful home, but the roof, it may need a roof, and you're like, this is ideal for me. I can fix this up myself. Um, I'll put the roof on myself. I got, whatever the case may be, you would get this type of loan. If your credit score is not as good, and if your credit history is not as good, the FHA loan, quote unquote, first time home buyers loan, is a government backed loan that will still, with your imperfect credit, loan you the money to buy you a house. Okay. They require you to put down a 3.5% down payment. It used to be 3%. They moved it up to 3.5%. Okay. With this particular loan, the house has to be move-in ready. So it has to pass the inspections and meet the requirements of the inspections, things of that nature. And it can't be anything major because they feel like if you don't have perfect credit, um, if your income is not really, high, all of this type of stuff, they don't want you to struggle going into this home trying to figure out how to put a roof on there. Okay. And then you have the USD loan. That USDA, that's more for um, home loans where if you're purchasing a house maybe further out on some land, this is the type of mortgage that you would take out. And then they have the veteran loans, which is specifically for veterans, where veterans are not allowed to put down a down payment, and they will loan them 100%, okay, of the price of the home. All right, moving on, guys, because I want to get through this. Down payment assistance. Okay, if you when I get to the next screen, you'll see some options for down payment assistance. You can screenshot that. Down payment assistance are some programs that have been put into place mostly by government agencies to help people get into homes who may meet the qualifications. So the house may have some qualifications that it has to pass to get the loans. Your credit may be a factor. Um, what else to meet down payment assistance? Maybe something else, but they're really quite easy to get. I always encourage people get those credit scores above 600 so that you can be eligible for these programs because it is going to offset your closing costs and and the monies that you have to bring in for closing. Okay. Here are some entities for Missouri side, if you want to screenshot this, that offer down payment assistance programs. Your local urban league offers it and have the programs. Better Family Life have the programs. Beyond Housing, um, the Housing Partnership, and MHDC is a Missouri government program, and most lenders do offer this as well when you are getting your approval loans and getting, if you're going through them, they may offer the MHDC as well. Now, the good thing about the down payment assistance programs is that you can double dip. You can take advantage of the bank. If your bank has a down payment assistance program, you can get their money if you qualify. And then you can run over to Urban League, Beyond Housing, Better Family Life, or somebody and also get their down payment money. Okay. And then that also offsets your the money that you have to bring into closing. I have several clients that have taken advantage of more than one down payment assistance program. And due to that, they have brought very little money into closing. Okay. I'm talking on a $230,000 brick, beautiful home, finished basement. My client brought in $191 to closing. Okay. So I always try to tell people, don't get thrown off and scared by having to have money. You literally can buy a house for less than what you can, that you will pay out to rent a house. Okay. For the Illinois side, if there's anyone from Illinois that is on this webinar or who desires to move to Illinois, since we're so close, screenshot this. These are the names of the agencies that are offering down payment assistance in Illinois. Okay, so home inspections. I touched on this, that a home inspector is going to be a part of your team. He's going to inspect your home from the top to the bottom. He's going to provide a report at the end of that inspection that's going to tell you every single thing that is going on with that home, what things are an emergency that should be repaired, and what are the things that you should keep in mind that may need some maintenance later on down the line. Okay, when we get these home inspection reports back after the inspection, I go over it thoroughly with you. And this opens us back up at this point in time in the process to renegotiate our original agreement with the seller. Okay. The home inspection is the only time that you can break a contract and get out of it without being penalized. Okay. Now, let me go into how you can be penalized because I did not cover that. So once you go up under, let's say, for instance, contract, meaning that your offer on a property has gotten accepted, you have 10 days to get a home inspection from that acceptance date. During that 10 days, you have to get the inspection report, review the inspection, hire the inspector, get the reports, review them, and start your negotiation process with the seller. Also, at the beginning of that contract that you go under, you have to turn in what we call an earnest money. Your earnest money typically goes like this: it's 1% of whatever your purchase price of your home is. So let's say, for instance, if your home is $100,000 or less, on $100,000 or less home, my buyers put up a $500 earnest money. That earnest money goes into an escrow account at the title company that you're going to close at, and it is credited back to your um, closing statement before you close, right? So let's say, for instance, if your closing cost is $2,000, that $500 that you put down in earnest money will be credited. So now your closing cost is going to become $1,500 that you have to bring into closing. That's just an example. Um, that's due within 3 days, that earnest money, once you go under contract. If your house is between 100 and 200,000, your earnest money is going to be $1,000. If your house is between 200,000 and 300,000, you probably can put down 1,500 to $2,000. Okay. And we'll discuss that when we, a little later if you have any questions on how that works. But when that earnest money goes up and goes into escrow, it's telling the seller that I am purchasing this home in good faith and that I'm going to uphold my bargain and my end of the contract. So, how you can jeopardize that earnest money is if you jump off into a contract and you do not follow and meet the deadlines of the contract. You're ignoring your agent when they're trying to get in touch with you. You're not getting the stuff over to the lender that they're requiring and requesting for you in a timely manner. You're ignoring the title company. You're just kind of just doing your own thing and waiting on your closing date. And then you realize nothing's closing on time because you're not meeting all of the deadlines and things of that nature. Okay. So when you do that, you do what we call breach the contract. If you get on the seller nerves and you are not falling in line and things are not moving along and the seller has taken their house off the market, they can fight for your earnest money or a portion of it. Okay. But that doesn't typically happen. It actually very, very seldom happens. Another way you can jeopardize your earnest money is if you go through this whole process, keep the seller's property tied up for 30 days and then decide, you know what, I don't want it. I changed my mind. I saw another house over here I don't want this house. I don't want to buy it. I'm not going to close. Well, the seller is entitled to your earnest money if you were to pull that type of uh, foolery at the end of a deal. Okay. If there's anything that's going on during this process that you feel like you need to discuss with your agent, please do so. Be transparent because your agent knows how to negotiate. They know the terms of the contract. They know how to get you out of the contract without being penalized. They are going to know how to help you navigate whatever problems you're having to make sure that you don't lose any money, um, if there's for some reason you need to try to get out of this contract. Okay. But the home inspection is a good time to get out if you change your mind. You will lose the money that you spend on your home inspections because you do have to pay for that up front. But if this house turns up horrible and you absolutely do not like what showed up in that home inspection, if you do not want to go back and ask the seller to pay for it and to provide concessions for those problems, this is the time that you can back out and walk away from the contract. Okay. So I always recommend the home inspection slash building inspection, which you see, they're going to look at the roof, the structure, the foundation, the windows, your AC unit, your furnace. They're going to look at the deck, electrical, plumbing. They're going to look at those type of things. The sewer inspection, I always recommend because there are sewer lines up under your house. You're going to want to make sure you know what those sewer lines look like because if they are broken, cracked, got tree roots in them, tore up, there's a very good chance that your house is going to back up with sewage when you get in there. So we do the sewer inspection. We make sure that is good. And if there's any problems going on with the sewer, the seller has to fix it. We do the radon inspection. Radon is this colorless, odorless gas, poisonous gas that could be in your home coming up from the soil. We always recommend that. If there is a radon problem in that house, when we get that report, the seller has to fix it. Okay. So your inspections are very important. The termite inspection, if you have a frame house or a wood deck that you're concerned about, maybe there's some termites issues that you might be concerned about. I recommend that. These inspections are affordable. Okay. This is money that you will need out of pocket once you go under contract. You do have to pay them before they perform the inspections. Your building inspection is probably going to run around 4 to 5 to 6, maybe 4 to 500 and some dollars, depending on the size of your house. Your termite inspection is about $75. Your sewer inspection with the person that I recommend only runs $99. And your radon inspection, I think, is about maybe 100 and some dollars. I can't, maybe 180, something of that nature. So typically when you get ready to do your inspections, you're going to be out of pocket about 500 to 600 and some dollars, okay, to get these 4 inspections, 3 to 4 inspections. So you want to make sure you have your earnest money, your inspection money, and your appraisal money when you're getting ready to purchase, which appraisal is next. The appraisals are very important. Again, this is where the bank has an appraiser go out. They assess the property. They make sure that this property is worth what the seller is selling it for. So don't be scared that you may pay more for a property than it's worth. You won't. Okay. They're going to assess the value of this property and make sure that the bank is not loaning you more money than what it's worth. So this process cannot be avoided. It's absolutely mandatory, and you do have to pay this before um this payment is due out of pocket as well up front. Okay. Everything else will be due at closing that comes into play. But these 3 things, the appraisal, the inspection, and your earnest money, are monies that you will need to have. So I always tell people at least have a couple $1,000s. You may not use it all, but those are what you're going to be paying out at the beginning of the process. Okay. The appraisal normally runs about $400. $450, something of that nature. But it's very important and it's a must that you have it. Okay. The importance of homeowners insurance, for those of you guys who don't know what this is, it's absolutely required that you have homeowners insurance on your home when purchasing, just like if you have, let's say, car insurance, right? But the thing about it with homeowners insurance, being that the bank is loaning you money and this home is so valuable and it's an asset, you have to have it. It becomes a part of your mortgage. You pay you shop for homeowners insurance. When you get to when you go up under contract, you have 10 days to find who you're going to go with. I always tell people get about 3 quotes. Call your car insurance company, call some other insurance companies, get your quotes, okay, and go with the best quote because it's going to be a range on what this will cost you. Let's say, for instance, that they say your homeowner's insurance is going to cost you $1,200 a year. That means that $100 every month is going to go toward your mortgage payment. And it's included in your mortgage payment. So let's say, for instance, the lender's payment is made up of taxes and not taxes, principal and interest. So the lender's portion of your mortgage is principal and interest. Let's say their principal and interest is $600 based upon the loan amount that you're getting. Then you shop for your homeowner's insurance. That's $1,200 a year. That's another $100. So now you got $600 from the lender. You got $100 from the homeowner's insurance. So now your mortgage payment is at 700. And then we got to look at what the taxes are on that house. Let's say the taxes are $1,200 a year on that house. Okay, that's another $100 that's going to go towards that mortgage payment. So now you have 600, 100 for homeowners insurance, 100 for taxes. Now you know without a shadow of a doubt your mortgage payment is going to be $800 a month. Okay, that's how that works when it comes to determining what your mortgage payment is will be, and your agent can kind of help you get those numbers as well as you go through the process. Okay, to keep you where you want to be. Okay, the closing agent, we're coming up on the end. The closing agent and closing cost. The closing slash escrow agent is the title company. The purpose of a title company in real estate transaction is to ensure that the legitimacy and smooth transfer of property of ownership. They conduct a thorough title search to verify the seller's right to transfer ownership and check for any liens, encumbrances, or claims on the property that might affect the sale. So the title company is your best friend. They are going to make sure that who says they own this property actually own this property. They're going to make sure they have the right to sell it. And if that person who owns it has any judgments or liens or lawsuits or anything that is against them, it will show up on the title. Okay. And that title company is going to make sure that that person pays all of that stuff off that's attached to that home, the title of that home. It has to be paid off before you guys is closed. Okay, or to be closed off once the transaction take place. That way you have a home that is free of any type of repercussions or anything. You own it, you don't have anything on there, and it is going to be legitimate. So they're your friend. They're the ones that are going to hold your earnest money and make sure it is applied as a credit at closing. They're going to also provide you with title insurance. Okay, and what that means is that if anything was missed after they went through this process with this seller, let's say, for instance, the long lost relative or the black sheep of the family who had ownership in that property as well, maybe they were an heir, pops up out the blue 2 years after you buy the house, which I've had this happen before with one of my clients, and say, hey, what are you doing in my house? I own this house. With the title insurance, if they made a mistake or dropped the ball, if there's anything that's due, if it's true, and if there's anything that's due to that particular person that pops up, is going to be covered under the title insurance. Okay. Um, the day of the day of closing, we're going to talk about what to expect. So when you get close to, let's say, the end of this process, right, the home buying process, you've been through the inspections, you've cooperated with all the parties involved. Um, You've gotten your approval, your final approval from the lender that says we are guaranteeing that we're going to close, that we're going to loan Stella this money, and she's going to be able to close on January the 30th. Before you go into closing, um, and sign your documents and paperwork, your agent and yourself is going to do what you call a final walkthrough. You are due that. And you want to make sure that you go out to that property within 24 to, let's say, 72 hours before the closing date, and make sure everything is in order, just as it was, if not better, than when you first went under contract. When you went through the inspection period, if the seller was required to fix anything, if that was negotiated in the contract, this is the time that you're going to verify that those things have actually been fixed. Okay, so you're going to have a final walkthrough. Um, the settlement statement will come out to the agent from the title company before you close. The agent should review that settlement statement with you to make sure that everything on there is right, that all the fees on there is right, the cost of the property is right, and that you're in agreement with it. It also is going to disclose how much you have to bring in to closing. Okay, so your closing cost down payment, let's say for instance, after your sellers pay concessions after down payment assistance program, if you're required to bring $1,900 into closing, it will show up on this settlement statement, and it'll show you how they got to that number. Okay, and then what you have to do is get a cashier's check made out to the title company before you come to closing. Okay. If there is the keys that are due to you for your home, you will get those on the day of your closing. Typically, what happens is the sellers sometime does not want the buyer to get the keys until the seller has been paid. Okay, so it's best to close early during the day so that the documents can be reviewed between the lenders and the title company, and so that the title company can disperse, the lenders can disperse on your home and basically pay the seller for your home through a wire transfer. Once the seller has been paid, everybody is notified, and then they say, okay, hand the buyers their keys to their home. Okay, you'll get a copy of everything that you have signed at closing between your agent and the title company and the lender. You'll have all those in what they call a closing package. You will get that. You keep that for your records forever. Okay, couple more slides, guys.
Wonderful job, Miss Kelly. And for everybody that's on the call that think, well, Miss Kelly did an awesome job, put some fires in the chat, put some comments in the chat, because that was a wonderful presentation. And this is our first combined presentation, and there are many others to come. And Miss Kelly, yeah, if you don't mind, pull it on my screen for me, that'd be great.
Absolutely.
Yeah, then next time I can kind of take over. But yeah, definitely, guys, we appreciate you coming, and we'll be having more of these too, more into detail of what it is that we are kind of delivering, more information on home buying, more information on credit, all of that great stuff.
Yes, yes, yes. Okay, I'm about to bring you up.
Thank
Um,
you.
Mr. Donnell, let me share my screen.
Yeah, this one our first combined Zooms, and this so far is so good, and I appreciate that, Miss Kelly. So the next slide. So yeah, my name is Donnell.
Uh-oh, hold on, Donnell. Sorry.
Okay.
Let
Yeah,
me,
yeah. Bonos. Been doing credit, real estate too, business, helping people with funding for years, pretty much all my life. Kind of like Miss Kelly, starting at a young age, 21 when I bought my first home, go back and I love home ownership. We love helping people. So that's part of the reason why I decided to kind of get in the credit repair space. So if you want to go to the next slide, that'd be awesome. Yeah, just give you the information about myself here. So we're a financial technology company, and we include software too, because we've been doing this for years. I myself jumped in the, say, credit business back in like 99, 2000. I partnered up with a couple people that was in to helping people purchase home and buy homes. And I was one of the guys that fixed the credit, So say if someone come in, they had some challenge credit issues, we was fixing a credit and closing the deal simultaneously. So just to give you a little information and a little introduction about myself, co-founder, CEO of Bo Knows Business, Bo Knows Credit, formerly the Credit University. And we still have that particular company, which we will be educating people, giving them information, DIY, do-it-yourself programs, all of that stuff is coming. financial strategist, innovative technology expert, credit specialist. Also, Blackstone career study. So I went to law school, got my paralegal license law. I like to dig in deep, whatever I'm involved in, so I can know and have that insight or knowledge to pass to other people. Business specialist, public speaker now. And these are just some of the things that I was featured in the Huffington Post, STL TV, STL Today, Conscious Magazine, Seven and Lotus, Crave, just to name a few of who I am and what I've been doing this entire journey. Next slide, Miss Kelly. Let's talk about what is a credit score. So a credit score, which is called a FICO score for Isaac and Company, a San Raphael-based company, what they do, they contribute to getting scores based upon the data they receive. So a lot of people are just aware of Equifax, Experian, and TransUnion. Well, they don't get the data, they just provide the data. And the question you should be wondering, well, where does that data come from? It comes from other companies. So these companies are considered data furnishers, like, right? Equifax, Experian, TransUnion supply the data, but your data furnishers are companies like Credit Core, Credit Logic, Nexus Lexus, SageStream, just to name a few. And you maybe heard of some of these companies, but this is how this process works. And this is what we look at when we attacking inaccurate, unverifiable items when it comes to the credit repair process. 90% of all lenders rely on a FICO score. So if you're trying to buy a home, right, they're going to do a tri-merge. They're going to pull all three of your credit scores, and they're going to be fair, right? They're going to look at the middle score. So say if TransUnion got a whole lot of negative items on there, right, that's not fair to you. Say Equifax has no negative items, that's not fair to them. But say Experian has a moderate, a little bit of both, then that's kind of fair to both of you guys. So that's why they picked the middle score, right? And they use FICO. So FICO is very important when it comes to where you going, and then more of an accurate score when it comes to purchasing home, purchasing cars, different things like that. That's why I went to school for FICO, to understand more about FICO and to explain. FICO score helps lenders make billions of credit decisions every year. Like, you got to think about it. These people don't know you from a can of paint. The only thing they know is the information that they log in and see. So that's your data. So if someone is using or have access or, you know, delivering or distributing your data, you want that to look good in your favor. You know, your income and job status has no impact on your FICO score. Well, this is something that we put back in the day. They kind of changed a little bit. So they kind of do now, right? These days, they kind of look at a lot of things. Again, like I said, this is your data. Or with Equifax, Experian, and TransUnion, these are the major data furnishers. Score ranges from 300 to about 850. So you kind of know where you are when you pull your credit and see that, you know, I'm at a 500 or a 600. You kind of know where you are on the totem pole. Vantage Score was created because FICO 8 discontinued authorized users from benefiting the credit score. I talked about that. So Credit Karma is a company that use Vantage scores. That's why your score can typically be a little bit different. Vantage score was invented because the authorized user concept, they wanted to get rid of that. And a lot of people outcry, say mortgage brokers, consultants, lenders, car dealers, they kind of cried out like, hey, wait a minute, we're not going to be able to close loans if we cannot use, you know, this authorized user score. And what is an authorized user? Piggybacking on someone else's credit, kind of like what I did on my mom's account. When I was young, she added me to a credit card, and you guys can do this too. You know, you can do this for your kids, you can do this for your family. You know, we sell trade lines in the event you don't know anybody with good credit, and it's an awesome way and technique to bump those scores up. And let's jump over here real quick. What information makes up your FICO score? 10% new credit, meaning if you got approved for a credit card, Capital One, that accounts about 10% of your FICO score, so it's good to get new credit. Type of credit, right? Capital One, Navy Federal, let's say Victoria's Secret, Macy's. So you got your store credit cards, you got your gas credit cards, you got your major credit cards, you got your furniture credit cards. That's what type of credit consists of. So FICO likes that too. That makes up about 10%. 15% credit history. Meaning, if you only got approved for a credit card 2 years ago, your years of history would be 2 years ago, right? If you got approved for a credit card 10 years ago, your years of history be 10 years. And back to kind of piggyback on what Miss Kelly talked about, this is why you don't want to close your account. This is one great example where when certain people dispute people credit, like we are aware, we very careful and cautious of what we do with all of our clients that's in our program. So if someone, you sign up for a program and you got these good accounts, right? But you've been late one time, you didn't have an impeccable payment pattern like this other credit card, but this particular credit card you have for 10, 15 years. You don't want to close that. You don't want to delete that in this entire account. Even if it's closed, that history still stays on your file. And I'm going to talk about this when I jump into the trade line part, because you want to keep that length of history, and you see it makes up 15%. Payment history, 35%. What that means is your payment pattern. So if you're paying on time, slow pays, no pay, you want to avoid that as much as possible, because that's the most meat of this, right? If you have a 30-day late, that's going to demolish your score. So if you are in the program and you are trying to get a home and they looking for a 620 FICO score, try to be current on your monthly payments, because the minute you get a slow pay, that's worse than getting a $10,000 collection. You better off getting a $10,000 collection versus a slow pay, because that'll definitely drop your score. And then amount owed, that goes back to the trade line or your particular credit line. So say if you got $1,000 credit card, right? And your balance is $1,000. What's your utilization? That's 100%. FICO hates that. They don't want that. They want you at 30% or less, right? I try to tell people, hey, pay your cards down, keep them down, and just show them that you can make payments every month consistently. That's what they like. Keeping the balances low, making your payment before the due date. And they don't tell people this. Don't, after the due date, they docking, they looking. Before the due date, you get more credit. And just to kind of give a combination, when you take the length of credit and your amount owed, that's a total of 45%. So think about it like this. That's your trade line. So with late payments and trade lines combined, you can really increase or decrease your FICO score depending upon what you do. Meaning, so if you got $1,000 card, you maxed out, that's going to lower your score. But let me help you with another scenario. Say you got a $10,000 card and you maxed out, you $10,000 utilization. So now your score is low because of that. And your card is only 1 year of age. What can we do? We can add a trade line to that particular client to help, one, increase their utilization. We'll lower their utilization and increase their credit line. How? Here's an example. If we have a $20,000 credit card, zero balance, say we add them together. Now we put your 10,000 and our 20,000 credit card on your file, right? That's 30,000 in total available credit. Remember, you had a $10,000 balance. So now your utilization went from 100% down to what? A third of that, because 10,000 is a third of 30,000. So your utilization instantly dropped from 100% to 33%, which does what? Shoot that FICO score up. That's exactly right. So now if you're trying to purchase a home and you stuck, let's put a trade line on there real quick and help you out there. And another benefit is, remember I said, yo, $10,000 credit card was only 1 year of age. Well, guess what? That credit card or trade line that we put on your credit is what? 10 years of age. So now you have that age, which in turn has helped out the length of the credit history. Next slide. Now, why does credit matter? This is one of my main slides, and we just kind of updated this. Again, we just wanted to bring about these new calls and combine our efforts and our experience and knowledge and expertise and help out the people. So why is credit important, and why does the interest rates matters? Here's an example. So a person with high credit, right? Say if you finance a $23,000 vehicle over 60 months, right? Your payment with 3%, it's about $413 a month. Interest paid over that 5 years is only $1,700, right? That ain't bad to borrow $23,000 from somebody and only got to get them back $2,000 in interest over a 5-year period of time. That ain't bad at all. But let's drop down here to damaged credit. This is what credit is really costing you. Why? Improving your credit is so important. It's insane. Again, I did this when I was 19 or 20, and I would never stop messing with credit, business credit, none of that in my life. That's how the world works, and you should be aware. The same car, you find it, and this is what gets a lot of people in debt and the more problems that they already have just by knowing credit. $23,000 vehicle, you finance that vehicle with an 18% interest rate. Some of y'all know the car dealerships go up to 29%. It's a couple people over here that can attest to that. You can get a high car note and roll off the lot. And like Miss Kelly just said, that's a liability. Statistics, 28.4%. According to Experian credit reports, approximately 28.4% of the U.S. population have credit scores considered below good. Additionally, about 16% Americans have no credit at all, like just blank, and not even aware, not even looking at their credit report. What? Like you should be looking at this stuff daily. You should be looking at you should be in some type of monitoring service, like what Miss Kelly showed earlier. Those are some of the monitoring services you can take advantage of. How to increase your FICO score. Here are the inaccurate, unverifiable negative items that we dispute: charge-offs, judgments, repossessions, short sales, and even updating your personal information. So people are like, what do you mean by that? You could be moving up like the Jeffersons, right? Say you stayed in the blighted neighborhood and you still got this zip code on your file or this address on your file, right? Same thing with insurance companies. You got a nice car in a kind of bad neighborhood or a certain color car, your insurance rates is going to be higher. The same thing apply here. They don't really tell people that, but if you got these old addresses and old outdated information that's kind of when you stayed somewhere where it wasn't pleasant, let's remove that. Fraud, if you're a victim of fraud, any identity issues, somebody stole, we can help with that. Lost social, any of that stuff. And these are awesome ways too to challenge and get those inaccurate, unverifiable negative items off your credit. We do 605 different techniques, like she said on the thing I presented, paralegal license law. So collections, late payments, again, bankruptcies, inquiries. Inquiries is another thing you want to get off your credit. Foreclosures, identity theft I just talked about, and foreclosures, of course, is high because sometimes you can't even buy a home if you have a prior foreclosure on your particular file, and you can get those things off too. Tax liens, you in check system, we work with that, and also dispute status. What that means, if you went to another company and someone disputed your credit and things then come off your credit, they stack those disputes on top of each other. And with that being said, I appreciate you guys, and I'm gonna turn it back over to Kelly and for questions.
Awesome. I appreciate that. If y'all enjoyed that presentation, and if that was helpful and beneficial to you, make some noise in the chat box. Let's give them some fire signs and some thumbs up and some claps and stuff like that. Okay, so I appreciate that, Bo. Thank you for that valuable information. That was an
Absolutely.
awesome presentation, and I'm sure that is going to help somebody. Okay, and it couldn't have been more thorough. So what I want to do, guys, is I am going to open you guys up for questions, and let's talk about, let's chop up all this information that you guys just got and get some questions answered. So feel free to unmute yourself. You can raise your hand, and I'll call on you guys uh if you got any questions. Or do I need to unmute you? Are you guys muted?
Yeah, can anybody unmute and let's see if we can hear you?
Yes, we can unmute.
Oh,
Okay.
okay, great. Okay. Hi, Cleo. How are you?
Hey, Kelly, I'm doing good. How are you?
I'm doing pretty good. Thanks for joining us this morning. I hope this added some value to your life. And
Yes.
you got any questions?
Yes, this was awesome. I appreciate your time, you and Mr. Bobo. I noticed that you were saying with the veterans, the VA loans. My husband is a veteran,
Okay.
and you said they don't allow them to put down payments for the VA loans.
Yes. So
But
go ahead.
okay, and then they do require closing costs, right? They don't assist them with closing costs. They have to pay the closing costs.
Mm-hmm. Yes. So veterans get 100% loan. Okay.
Okay.
So if the house is 100,000, the bank loans them 100,000 under the
Okay.
veterans. They don't have to bring in that 3,500, 5,000, depending on what their down payment is. I also believe there's another fee that is that you guys don't pay, like maybe the termite fee,
Okay.
um, and things of that nature. And but there are down payment assistance programs that can offset the closing costs, which is what, I was talking about at the beginning of the presentation. And then we can ask the seller. A lot of times what I like to do is during the inspection process, when we open back up for negotiation, if there's, like, say for instance, we get this full report. If there's
Mhm.
something major that, even if I have a client that say, well, that's not a big deal. If I feel it's a major and gonna be a burden on my client, I'm asking the seller to fix that. Okay.
Okay.
But then there are these little maintenance things, that's really not a big deal. It's just something that may come along in the future. This is gonna need maintenance in 2 years from now, whatever. If it's something, I still would ask the seller to fix or provide a concession. So
Oh.
I'll ask for, okay, you know what? This is going to be maybe a $500 problem 2 years from now, or whatever the case may be. Give my client $500 towards closing. So that's the
Mhm.
time that I am able to negotiate some of that closing cost for you guys.
Okay. Okay, and I have one last question. This one was for Mr. Bobo. You were saying about adding trade lines. Are you
Correct.
saying to apply for additional credit? Like when you say add the trade lines, just say if I have a car loan, but I don't have any store cards or anything like that to get that score up. When you say add trade lines, are you saying just apply for different forms of credit to add to it to
Okay,
shoot it up?
that's a very good question. So typically when people don't have good credit, right, we go through the process of kind of removing all the inaccurate, unverifiable stuff. So they don't have anything, right? So when they do go apply, banks will look at what do you already have. So if you don't have credit and you need good credit, then what we do, we'll have you piggyback. That's the old term on someone else's account, right? They data will show up on your file. So say example, if I have a $20,000 credit card from Chase, 20 years old, zero balance, I can place that information on your file. Now you can go apply at Chase and perhaps get you a credit card for a higher amount because you didn't have none on there. So now this authorized user, which is a trade line, is on your file. You go apply for a credit card. Now they give you a card, which is another trade line. And now that is considered a primary account. So that's how we kind of do the trade line process. So it's a trade line no matter whether you do it or we do it. It's called that. But if you need to build and boost your credit, you can add a trade line, and that's a service that we offer. You can add as many as you want from different companies to help your credit and help you get approved.
Okay, so you can become an authorized user by piggybacking off of somebody else's
Info.
info.
Absolutely.
Okay.
Yeah, absolutely. That's phenomenal, right?
It is. I've never
Yeah.
heard of that. I mean, I've heard of authorized user, but
Right.
then when you say it like adding a trade line by using somebody else's, that's
Yeah.
And
And
we
that's
do it. We do it all the time, and it's
mm,
industry. It's good.
really.
legal, right? And that person information, you can damage their credit, they can damage yours. Their record already impeccable. Just that information just reports on there, and now you use it, and it only stay for a particular time, right? So for an example, this how I work on our end. Say if I'm a trade line owner and I have a credit card 20,000, 20 limit, I can add up to 5 authorized users. So that makes sense for that person. Now this person that's a trade line holder is making money. They could be making a couple hundred off each slot. So they could be making $1,000 a month. And we could be selling for $300-400 for a trade line. You see how that works? So now the trade line owner is making money and it's also helping you. And then they doing this every 2 months because it's a 2-month cycle. We keep them on for about 2 months, give people enough time to do whatever it is they need to do. And if you need more time, you can extend that period.
Okay, got it. That's awesome. Thank you. I appreciate you all's time.
I want to add on to that too. Because I do it for my loved ones. I did it for my daughter when she was transitioning out of college. I added her to a card or two. Her score immediately went into the 700s,
Wow.
And then my dad, who never had credit, don't believe in it. I ain't giving nobody no money. I Old school. I run across that all the time with our seniors, with our
Right.
baby boomers. They do not believe in getting credit. But guess what? It came a time he needed a car. And when I took him to the bank and they said he didn't have no credit, I was like, okay, we'll see you in 30
Oh,
days.
yeah.
I went home, made a phone call. Next month, he had a 750 credit score, went up there, got his loan for his car. So being able to utilize these trade lines, instead of trying to figure out when you ever going to get your credit score up to be able to get approved for a house, put a few $100s on a trade line, get your credit scores, get your house, and move on to the next thing you're trying to get. That's what I like to
Right.
do. Move on. It's just,
Absolutely.
don't spend too much time on this stuff. It ain't that hard,
Right.
Get with the right people, get what you need done, and move on
Right,
to the
right.
next
And
thing.
then
So,
I dropped my digital card in,
Okay.
right.
All right. I think
And
I
I
did.
dropped my and I
I
dropped the digital card too in the chat just in case you needed that with other information. But yeah, we definitely have services that work expeditiously and that's affordable and DIY too.
yes.
Okay. Yeah, I think I created a contact and sent you my information too.
Okay.
Yeah,
Thank
thank you. I
Absolutely.
appreciate your time. So good seeing you, Kelly.
You too. Thank you so much again for joining. I was excited to see your name.
Thank you.
And
Any
Miss
other?
Kelly, we do have someone else is finna say something.
Oh, go ahead. Anybody else?
I do have a question.
Mm-hmm.
This is my turn.
Hey, that's Brittany.
Hey, how
Kelly.
are
Hey.
you?
Hi. How are you?
Good, great presentation, by the way, both of you guys. Really quick, when you said that when you're getting approved for a home, they look for 2 years of employment or you being stable at one job, not switching around. How does that work with entrepreneurship or having your own LLC? Is it the same criteria or how do they determine that?
Okay, great question. And I probably need to add that to my slide because I do get people who are business owners that come. So when it comes down to being a business owner, it's much more, it's a little bit more complex. Okay, simply because a lot of times we go out and we start a business, right? We grab an LLC and then we just doing stuff, but it's not structured. We don't have that business bank account. We don't have this software that's kind of managing and keeping track of our expenses and all of that type of stuff because they're going to ask for profit and loss. They're going to want to see these transactions to see how often this income is coming in, how much you're making. So it you have to be more in order, I should say. Now there is a particular lender that I know that has a product that I will send entrepreneurs to, just in case, if I'm not sure if they can make it or not. But basically, they do what they call a no income document because a lot of times new businesses don't file their taxes either, on the income that they're making because maybe they don't feel like it's substantial enough and they just don't have that part of their business together. But they have a no income loan, document loan, where they will just typically use that bank statement that you have that is showing all of this income coming in and out, and they can determine, and I'm not for sure what else they use on top of that, but they can use that to determine whether or not if they're going to give you a loan. Okay.
Right.
Thank you.
And then just to piggyback on that, because that's how I bought my house. I bought my house, which them was programs back in the day. They had stated no doc and low doc, right?
Right.
So that's another reason why we help with not only just building personal credit, but building a business too, because you got a lot of people that's entrepreneurs. And I have lenders too in our database that will kind of deal with more entrepreneur type individuals versus people that don't have W-2s. You see what I mean? They 1099. So they do look at things like depositories. That's a key one, right? And nowadays they look at fintech technology, which is big because a lot of people using Cash App, Zelle, Apple Pay. So all of these things are factored in, and we do have lenders that can assist. So what we do in our program with credit and business is get you acclimated or ready to, go through that process. Yeah, it's banks and stuff that do lend for that.
That's
Thank you.
good to know because me and my husband we've owned a construction business for over 20 years and we have the business banking and stuff like that to show. But I didn't know lenders would use that, because our bank statements, they would tell it all.
Right.
Yes.
Yeah,
Yes.
that's awesome to know.
Yes. Absolutely.
Any other questions?
I got a question.
Go ahead.
Oh, she can go ahead. Okay, thank you.
You're
Thank
welcome.
you all for this presentation. It was wonderful. Kelly, I'm so happy. I'm so excited.
Yes.
So I have one question for Kelly. How many months should you prepare when you're trying to go into that process of buying a home?
So that is definitely going to be just based upon the individual and what they have to work on. So, if it's your budgeting, if you got to get your expenses down, you got to look at, how long it's going to take you to pay off. You know what I'm saying? Whatever credit cards you're trying to pay down or get up under that 30%. Um, if you feel like, what, I'm comfortable, like I just spoke with a client, a potential client. She will be my client in the future, but she's preparing, right? And it was around Thanksgiving that she was saying, okay, I want to be ready by spring. So she set her own goal. And I called to check up on her, and she's like, okay, I'm on it. Things are improving, things are coming along. I just will feel comfortable if I have a little bit more money saved. So to her, it's her having more money saved, and she knows how long it's going to take her to do that. Okay, so it's just writing out your goals, really getting an ideal of what it is that you want, even when it comes down to the amount of house. Have you looked at the area that you want to be in? Do you know how much the 3 bedrooms are going for with the finished basements? What is it that you're looking for? How much is it going to cost? And what is it going to take for you to get there? Is what you're going to have to look at. And then
Awesome.
you can also be transparent with me, because I often, with my clients who are very transparent, I am able to give them that insight and give them resources and help them with strategy to get to where it is they're trying to get to quicker.
Awesome.
Okay.
Thank you. Thank
You're
you.
welcome.
And then I had a question for Bo. Is that correct?
Oh yeah.
Okay, okay, awesome. So you were talking about the trade lines. Or trade lines permanent? So once that increase happens, does it go back down within a year, or does it stay that way when you buy a trade line?
See, another good question. So it's a two-part answer to that. So say if you have this $10,000 credit card, right? And we put that $20,000 trade line on there, and it's send your utilization down from 100% because you was maxed out on that $10,000 card, and we put 30,000 total available credit down to 33%. So now your score goes up because of that. And also your score goes up because of the age of that trade line. So what happens when we take you off, that account just show close, right? And I've been seeing lately where the account completely disappear. I've seen it on people file the credit card industry doing all type of things, right? It just be changing and whatever. But when it closes, of course, if you didn't pay your balance down on your card, because it say you got 2 months to do whatever you got to do, then your score gonna drop a little bit. Say if it went up 30, 40 points, but that age that's still on there, even though the account is closed, they cannot delete the age in most cases. So that 10-year card is still there. So if you got 20 points for the age and 20 points for the utilization, now you down 20 points rather than being up 40. But during that time, we kind of encourage people to do what it is that they need to do, because the trade lines being temporarily, because you're paying for them, right? Couple month cycle, go and do what you got to do. Apply for your credit card, get your car loan, and then once that stuff report, that all might help keep your score where it's at. Because I done seen that happen too, where people go apply for things and take care of their bill, and their score actually went higher, even though the trade line closed.
Okay, thank you. How much are the trade lines?
Trade line is based on the utilization, the limit. So I mean, not the higher the limit, the older the account, the more valuable it is. So trade lines can start at $250, $300 that we sell on up to about $600, $700, right? And in our program, we sell to brokers. I deal with a lot of credit repair companies and stuff like that. So for my clients, I give them my broker prices. My broker, they double the price. So a $500 trade line with us will probably be sold in the market for $1,000. So they valuable. You see what I mean? But we just did 300, 250. I work with people. We make it
Awesome.
make sense. Absolutely. I
Awesome.
want to see you succeed. I want to see you better. I want to see, we can't do nothing with the credit being poor. We got to keep you going. You can't buy a house with poor credit. You can't even buy a trade line. So we try to expedite everything. Get the credit done. Get the trade lines on it. We got programs that's expeditious too to get off that inaccurate, unverifiable item. I got a couple of people on the line that probably can attest to that too. So if y'all want to jump in and throw a testimonial, we live with it. You know what I mean?
Listen, throw a testimonial in there. I love that. But you do teach individuals how they invest in other companies like Amazon, Apple, etc. Do you
Oh,
teach as well?
yes. I mean, I had a young lady that started with credit, and she have a healthcare company here, and then she got into Amazon, and she ended up getting some gloves, you know, like these little diamond dotted latex gloves. We helped her get on Amazon, and she's doing really well selling. Now, Amazon a little tricky. It was a little process, but that's kind of the building business process that we do. I help with anything that's business and credit related. I think LaPer's trying to say something too.
Thank you. I'll be reaching out to you.
Absolutely, Miss Davis.
No, I was just gonna say that the business that Donnell has, I've been with him for years, and I mean, working with the trade lines and everything, it is great. But now I'm in the process of trying to buy a house, so I'm hoping that everything goes as well as it did, because previously when I used the trade lines, it was to get a car. So everything worked out perfectly. It is beneficial, but this meeting was great as well. So I'm gonna stick to it. It's very informational, everything that I've been asking him, and he was like, join me, join me, join the meetings. And I'm like, okay, I'm driving on my way to work, got my phone posted, listening. So everything it's very beneficial, and I will be joining more meetings.
Thank you, LaPer. Appreciate you.
No
Absolutely.
problem.
Great. Any more questions? Again, we're here for you. I want to let me go back and see if there's anything in the comments. Let's see. I don't think there are. But I do want to
I got a question.
Oh, go ahead. Yes, Stella.
Okay, so if I were to want to purchase a home for $140,000 and I have half of that money to put down on it, does that change the whole dynamics?
So basically, if you want to purchase a home and you don't have all the money, that lets a realtor know that they have to be able to get you in down payment assistance programs and possibly get you some seller paid closing costs, which both if that credit is cool, you know, it can be done. You know what I mean?
But
So
what if I have $70,000 that I can go on ahead and put down upon that? So,
oh, you mean like as a down payment?
right.
So yes, if you want to put a larger down payment down on your home, you're able to do that. And out of that larger down payment will come all your closing fees and things of that nature, you know, your down payment. So basically if you got 70 grand, let's say your closing cost is 5 grand. Let's say I offset 3,000 of that. That's 2,000. And then you just want to drop, let's see, 2,000. You got $68,000, left that you want to put all down on your house. You are able to do that. And what that does is it brings down your mortgage payment. So now instead of having that $140,000 loan, now you only maybe got about a 60, because there's going to be some other things that bring down your that actual loan amount. You might be down to
Mhm.
maybe a $65,000 loan now that you're paying on for your house, making a mortgage payment on 65,000 instead of 140.
Okay.
Mhm.
Okay. Another question. Say I have gotten the home warranty, the insurance,
Mhm.
and I'm not pleased with the insurance company that I have. Am I able to go on ahead and switch that up to another company midstream down the line?
Yes, so if you're talking about, so home warranty is different from homeowners insurance. The homeowners insurance is required by the lender to have on your home. That's the insurance that's going to protect you against a fire. If you're in a flood
Mm-hmm.
zone and you got to have flood insurance, vandalism, break, stuff like that, personal items, that's your hazard insurance, okay? You are able to check rates and switch insurance companies.
Okay.
One of the things that I didn't talk about during that particular session is that homeowners insurance got to be very tricky. I mean, it can be very tricky. What I mean by that is that um, they are very, I don't even know how to even say it, but basically, before you just call your insurance companies, right, and try to make a claim or see if something's covered, call and talk to an agent or me or somebody first, right? Because certain things they don't cover. And you got to have a particular type of language when you're talking to them because they don't like to cover. Even though you're paying them, they don't like to cover stuff, right? And they will find reasons not to cover your claim. And even if they decide, oh, that's not a claim, you just called in and asked a question, they still will count that as a claim against you. You don't want claims counted against you because they use that to go up on your insurance or find a reason to drop you from their insurance. If an insurance company drops you, it is kind of hard for another insurance company to pick you up because they're like, wait a minute, they got claims. When honestly, all you did was called in and said, my sewer backed up in my basement. Is this a claim? Oh, let me put this down as a claim. No, we don't cover insurance black. That's how they do you. So you have to be careful when it comes to filing claims with your homeowner's insurance. You want to call your insurance agent, right? That you choose, talk to somebody, call them and say, hey, I had this issue with the house. I don't know if it's worth me, if it's covered or if it's even worth me calling in to see if it's covered. Can we talk about it, right? Don't call that claims number and tell them there's a problem and you don't know if it's covered and you want to know. Now, your home warranty, which is through these separate companies, covers stuff like some plumbing issues, some electric issues. Oh, my stove went out. Oh, my refrigerator water dispenser don't work anymore. My washer and dryer stopped working. They cover that type of stuff.
Okay.
Okay, you pay them a year. You can pay them monthly, or you can get a discounted rate and pay them yearly. And whenever there's something going on with the house, it don't matter how many times you call them. You can call us. I mean, not the house, but whatever's covered, because you got to know. Look at the policies. Whatever, you could call them and say, like one of my clients, she just recently called me and said, my sewer backed up in my house, the sewer system. She said the warranty came out and cleared the lines for me, but I had to file a claim to cover the damage, and she had to file that through the insurance agent, and the homeowner's insurance did cover that claim. They paid her to buy all new material, get everything fixed that was damaged in the house. Okay.
Okay.
But
Now,
yes, you can switch.
I got a question for Mr. Bobo.
Absolutely.
Okay, say after I get my credit rectified and I want to lower the payment, my car payment. Would it be wise to do that and then purchase a house?
Okay, so it just really depends on your DTI and how simple that process could be. Because see, sometimes, say if you going back through the original bank, say if you got a bank that say, "Hey, come back in 6 months or 12 months," or a credit union, and they willing to refinance you because you got a high interest rate on your card just to get in it, right? Sometimes you can do that. But what I wouldn't consider doing is going back out and trying to shop for a new loan because then they're gonna hit you a lot with those inquiries. You see what I mean? And even though typically back in the day, if you do everything within a week, say if they consider that shopping, but I still seen now, but before it wasn't like this, that if you pulled your credit, say all in 1 week's time period or one day, it only hit you for like the one inquiry or two inquiries. But nowadays I'm seeing a little different. If somebody go out and they get these 13, 14 inquiries on their car, it didn't lower their score even more. See what I mean? So now you kind of did the opposite. You need your score to be at a certain loan or amount to get this loan, but yet you want your DTI to be, good too. So if your DTI is not really bad and it's not really bad, yeah, I would go ahead
The income.
and the income ratio, then I would go ahead and close on a home. See what I mean? And then come back to the car. It just really depends on the situation. And as I have clients, I dive deep into it. I can look at the profile and say, hey, this make more sense. The payment ain't gonna be number this much different. Just wait till this is done, the way you don't upset or cause any problem in what's called underwriting. Because when you get the underwriting, sometimes they pull your credit again too, Miss Kelly, right? To make sure
they always pull your credit again. So
yes.
you guys need to know that, because I've had this happen. When you get your approval for your house, you do not touch your credit. You don't apply for new credit. You don't co-sign for nobody ever. You just don't mess with your credit because they run it and they say, oh, she's at an 800. Oh, she only got $2,000 in debt. We're going to approve her for $400,000 in a loan. She good. And then 24 to 72 hours before you close, they run your credit again. Oh, wait a minute. Now she's $15,000 in debt. Credit score and dropped 250 points. This, that, and the other. She no longer qualifies for a $400,000 loan. You know, she no longer qualifies at all. So I've had clients that um get their approval. I had one girl right before closing, they ran her credit, went up in her contract. She stopped paying her credit cards. She's like, I got my approval now. I don't need to pay no more back. I don't need to pay nobody else. I had another girl that got her approval, was good. Then she went out and after she got approval and opened up furniture credit cards and started buying furniture before she even got the house. So then they ran the credit and they was like, you no longer qualify for this loan because now you got all of this debt, and that just messed up your debt to income ratio. So you cannot do nothing after you get your approval. I've had people car break down. They're like, Kelly, my car broke. I got to get a car. I'm like, don't you go get no car. We close in 2 weeks.
Right.
Get your ride, borrow a vehicle, rent a car. I don't care. But do not go out and buy a car. Another thing I want to mention that I think is important about the cars is that you want to make sure that you go to your credit union or your bank and get your approval for your car before you go to the car lot. Do not go to the car lot because the car lot is going to be the one that run your credit 15 times
Yeah.
and drop your credit score 40, 50, 60 points when you can go to your credit union bank, say I need a car loan. They're going to say for how much? My budget $20,000. They're going to run your credit. 2 points might come off your credit report. They're going to give you your approval for $20,000. You go to the car lot and you pick out your car and then you tell them, call my bank and get what you need from them and give me my keys. That's how you buy a car. Okay?
Right.
Wow.
That's how you buy a car.
Right.
I
Right.
appreciate you guys for all this information. It's wow.
Valuable, right? And see, and things people don't know,
Yes.
like we encourage, and that's what we do. We walk through the entire process so people don't make them mistakes. We've been doing it for years. We didn't seen it, so now we kind of it's inevitable now. Like, hey, we're gonna avoid that. It's
Yeah,
not.
we've seen it, we've experienced it. Believe me, I have bumped my head and multiple times. I've got hickeys all over it. And that's why now I know I need to empower people with this information so that we can change up, right? It's time to get to the next level, right? We struggle for so long, we bump our heads, we don't know which way to turn, we hopeless, we feel hopeless anyway. We stuck in the same positions that we've been in for 5 or 10 years, 15 years, can't see a way out. And when really we sit around, we trying to figure out how everybody else did it, but honestly, everybody else just got some information that you don't have yet. It ain't because it's impossible. It's possible. You just don't have what you need to know
Right.
to move to the next level. Okay.
That's
Can
true.
I ask a question?
Mm-hmm.
Hi, this is Miss Rich.
Yes.
You mentioned about we can get different um, first-time home buyers assistance programs so we can stack the money.
So you can double dip is what we call it.
Okay.
So I can put you in 2 different down payment assistance programs. A lot of banks that I deal with, lenders, they have their own. So you have banks that say, you know what? For our clients, we're gonna set aside $10 million a year to assist in down payment assistance programs. Then you have government agencies like Urban League, Beyond Housing, Better Family Life that gets money from the government, applies for money to the government and say, we got this amount of money set to the side for our homeowners, right? I mean, for people who want to buy a home that need assistance. And then you might have government down payment assistance programs that says, hey, if your client meets these criterias, we'll give them a grant to purchase their home, to put down on their home. So you got all of these entities and resources, and then we just get you into the ones that you're approved for and let them stack. And then you have a wonderful agent such as myself come in and say, hey, my buyer needs some money, to help her buy this house, and the seller really wants to sell. And the seller like, okay, I'm willing to give her $2,000 towards her closing costs. So now you got this, that, and the other stacked up. I've had clients throughout my career that come to closing with no money. Now they paid their out-of-pocket upfront fee, right? For the appraisal, the inspections, they put down their earnest money. But with their down payment assisted programs or seller pays closing costs, they literally have come to closing with no money, and the title company is like, we're gonna be mailing you a check. They actually get you a money back at closing. It all just depends on it be that right price house, it be the numbers. Like I said, the one client had a $230,000 house, never thought she could buy a house, never ever thought she could buy a house, thought it was completely out of her reach. I sold a house to one of her friends. She got inspired. She started working with me, working on her credit, keeping in touch with me. Finally got to a point where she can get an approval. And lo and behold, she got in these programs and she went to closing with $191 out of pocket, but got a $570 some dollar check back in the mail. So it is so obtainable. It's so obtainable. It is so time for y'all, for people to stop paying rent. You know what I mean? And
And
get
stop
into
throwing
their
your money away out the window.
yes,
It's so true because rent is steady going up. You see what I mean? And
yes,
then another benefit, like I've been owning home, my property since I was like 2021. Whenever I did get in any, because everybody runs into financial hardship where things become affordable, unattainable. You don't have that problem when you own your property. You can go to the mortgage company and be like, hey, the same people I sold homes, Asian clients, Hispanics, my community culture, been dealing with this forever. They call me back and say, hey, I need to modify my property. I need to save. I ain't made no payments. I got people that ain't made payments in months, almost years, because we're going through the modification process. They had hardships. Well, you ain't gonna have that with no rent. Ain't no, you gotta go. You see what I
right. You
mean?
can pay
You
rent.
ain't pay your certain apartments, you don't pay in after 14 days, they can file for an eviction. Well, in the mortgage area, it's different.
Yeah,
You can modify. I done lower my payment so many times. There's so many things, turn things back around. So it's so many benefits to being a owner versus a renter. And we're gonna continue these Zooms. So y'all welcome to invite other people, as we continue to go and grow, because we do want to educate, get educated now, be smart about it later. That's one of the slogans.
yes. And if you know anybody who is in a financial hardship that owns a home, because what I found in our communities is that we just walk away. We be stressed out, right? We got issues. We got all this stuff going on. It's always issues, problems, and it piles up and we just don't want to deal with it. We just walk away. But I encourage people not to walk away from their investment, not to walk away from their wealth, because your money is your house is an asset. It is wealth. And so what I have done, because of what I have seen, I have started a new business called Gateway to Wealth Enterprises. And I wrote a book, and I'm gonna bring that up for you real quick. I wrote a book called The Ebony Gateway to Wealth. And in this book, I don't know if you guys can see it or not, but in this book I talk about it's a blueprint guide for building wealth for middle class Black families. And it just talks about all of the system that families, that people, other races, ethnic groups use in order to build wealth and to build generational wealth. I wrote this book. I encourage you guys to get it. It is on Amazon. I'll drop the link in the
Chat.
chat for you guys, but it is going to just open your eyes up to the power of home ownership, what it means, and how to get off into this thing and make sure you protect yourself against the things that come against, because a lot come against us when we do have this type of responsibility. We know that things are going to come against you. Problems and issues are going to rise, but the solution is not to walk away from it. The solution is to handle, to know what the resources and the things that are available are to you, and to tap into those so that you can keep what you got and get through it much easier than just getting stressed out and walking away.